Welcome to the Get Real Podcast, your high-octane boost of full-on reality therapy for personal, business, and investing success with your host, Ron Phillips, because somebody's got to tell it like it is.
Hey, everybody. Welcome back to the Get Real Podcast. Ron Phillips here. I'm coming at you today with what could be, depending on, who you are, a political podcast. Although I will not make it that. And as you listen to it, you have the ability to not make it that either. So today we're going to talk about tariffs. And I'm also not going to pretend that I'm a tariff expert, but there's a lot of fear in the market. Well, in the markets. I mean, you can just see what's gone on in the stock market. It's been, I think, a trader's paradise. There's been massive swings. Down, up, down. And it seems like it depends on what someone says, specifically the president or anyone from his cabinet says from one day to the next about tariffs. And most specifically, we get questions, comments, concerns about how tariffs are going to impact real estate. And not a ton of people, but there are some who are sitting and waiting it out. They're like, hey, listen, I don't know what's going to happen with these tariffs, but I'm concerned about the market. I'm concerned about the economy, what's going to happen. And so I'm just going to pause on everything. And so from a real estate perspective, I thought it would be good to talk about, what is the impact on, or what might the impact be? Because the reality of the situation is none of us really know what the impact of these tariffs are going to be. I think, based on what happened with Canada and Mexico, you could say we may not really see anything from these tariffs, depending on what happens, right? And since that's very much up in the air right now, I'm not going to pretend that I know. If you want to hear people who are pretending that they know, you can go on Facebook, you can go on X, you can go on TikTok, and you can go on the news. Pretty much everyone is a tariff expert. But I just thought, well, if we're concerned about homes, let me go see what people who actually are in the home building business say. And then I'll give you my opinion on, in the event tariffs have an impact, what that means to you and what I believe investors ought to be doing to prepare for this. Okay. I'm not suggesting that we stick our heads in the sand and not think about tariffs. I am, however, saying that the media and everyone on social media, in order to get clicks and views, nearly always embellish, I guess, or just downright lie. I mean, in order to lie, they have to know the truth. I think most of the pundits on television are pretty ignorant of most facts. And so I don't know that very many of them are lying. I think that they're just ignorant. They read whatever the teleprompter says. So, to the National Association of Home Builders we go. Here's what they're saying. They're saying that they estimate that about $204 billion worth of goods were used in the construction of multi and single family housing in 2024. Okay. About 14 billion of that were imported. So for the most part, we're getting our stuff from the US. Okay. So all of this insanity about, prices are going to go through the roof. Well, okay, on 7%. Now, that's still a big number. It's 14 billion. And if that number goes up dramatically, then it can affect prices. There's no question about it. So first off, if you don't know what a tariff is, it's basically a tax on imported goods. Okay. So the importer pays an additional cost. Sometimes the originating country absorbs that cost. It's very complicated. Not in every situation nobody knows really who is going to pay that cost, whether it's the country of origin, the company in that country, or whether the importer is going to pay it. Somebody's paying it. And when they pay it, it makes that thing more expensive. Okay? Because no one's going to just eat it. That's not the way the world works. Okay? They use an example of a washing machine. Okay? So they say if a retailer imports a $500 washing machine from a country subject to a 25% tariff, the retailer would owe $125 in tariffs to the U.S. government. So what happens? The retailer could go try and get the importing country to pay for the stuff, which I just said. The retailer could absorb the cost, which is probably not going to happen. The retailer could raise the price, which is probably what's going to happen. And then the retailer could do any combination of the above. So might someone not experience the total amount, and might it be absorbed by, a couple of those things before it gets to price? Yes. But most likely there's going to be an increase in price of some sort. Now, Canadian lumber is one of the big ones that everybody talks about. Okay. Canada accounts for roughly 85% of all lumber. That's a lot. I can't remember if this actually got handled yet or not, but my guess is that this is going to get handled. Okay. As of the time of the writing of this article, it says that Commerce Department is imposing a 14.5% tariff on Canadian lumber, which is not the end of the world. But when you're building massive, projects, that's a material increase on framing. So, yeah, that was as of April 2. So my guess is that that's not actually handled yet. I don't know whether it's going to get handled. The reality of the situation is that in the event that these tariffs from overseas, especially anything we get from China, which is, I think a lot of transformers, like things you don't think about in neighborhoods. When you're driving through a neighborhood and there's power poles and things like that, you have to have transformers. Transformers are very expensive, and we get a lot of them from China. So there's large items like that are multiple hundreds of thousands of dollars that you ultimately pay for through that neighborhood because the lot cost goes up if the cost to produce those lots goes up. Same thing with lumber. If Canadian lumber goes up 14.5%, framing is a large piece of construction of a property. If it goes up 14.5%, you can bet house prices are going to go up. Now, what does that mean to us? Well, I don't think that the strategy wait around and let's find out is a good strategy. Because let's just play that out for a second. If Ron's right and the tariff thing doesn't really materialize into anything massive, again, Ron, the tariff expert, if I'm right, then no big deal. And if you waited it out, well, then you've lost however many months you waited of returns that you could have been getting. But really, no big deal. However, if tariffs actually do raise prices, and all that means is that the house prices are going to go up again and become less affordable than they currently are, then you waited around and paid more, which doesn't seem like a very good option. So I don't think that the wait around option is a good one. I'm not trying to scare people into buying. I'm just trying to tell you, if you're in the market for buying a rental property, and you want to invest, I don't think waiting on tariffs to increase is going to be your friend. Now, you could say, hey, Ron, I don't know, man, the real estate market's going to go down. Well, we already done a podcast on that. I don't think wholesale across the country, the real estate market's going to crash. I think prices are probably leveling off in a lot of areas, but in some areas they're not. In some areas they're still going up. It's still a supply and demand thing. If you're in an area where there's more demand than there is supply, the prices are going to continue to go up. And let's play it out a different way. Let's just say demand slows down and builders have to pay what they have to pay to build properties. Well, that means that there isn't going to be as much, there's not going to be as much housing, because if people aren't going to pay the higher prices and the builders can't make money unless they charge the higher prices, then we're going to have less inventory. And we already know that the people who are in houses with a 3%, 2.5% to 3% mortgage, those people aren't selling. So where are we going to get all of our inventory? I mean, look, we can sit around and we can think, I harp on this all the time, like people since 2018 have been saying that the market's going to crash. And every single year they're wrong. It might, but I just don't see from a real estate perspective how that happens. I'm going to look for, I saved this Facebook post from a friend of mine. Let me see if I can find it really quick while I'm talking about this, because it illustrates house prices. And man, I tell you what, like there have only been 7 down years in 75 years. Let that sink in for just a second, because there have been plenty of stock market volatility since 1950. But since 1950, there've actually only been 7 down years. And most of those down years have been, 0.2%, 0.7%. The real massive decline in house prices came in 2007 to 2011. And again, we hit bottom of the market and started to bounce back in 2012. So the stock market does not equal the real estate market. They corresponded before because mortgage-backed securities, which is really what happened to the market, the mortgage-backed securities crisis impacted everyone. It impacted the banks. It impacted investors. It impacted homeowners. The psychotic nature of loans and what was being peddled as, A-paper loans, it just wasn't true. And when the house of cards came tumbling down, and I'll say it again, when the government got involved, everybody, and the regulators came in and they forced those banks to sell and just dump properties onto the market wholesale across the country, no matter what the market was, it destroyed the housing market for 5 years. And that wasn't necessary. We didn't need to do that. We also didn't need to mess up the appraisal system that we had forever. Wasn't necessary for them to do that. If there were some appraisers who were part of the problem, they could have just thrown them in jail and been done with it and left everything else alone. The government causes problems, and then they come in and with their solutions cause more problems. So I got off on a tangent, but this tangent is pretty important. People keep waiting for the real estate market to crash. Well, the historical view of the real estate market does not suggest that just because house prices get high, that the market is going to crash. It just doesn't. So if you're waiting around because you're scared of tariffs, so prior to the election, we were scared of the election. After the election, we're scared of tariffs. Listen, as soon as the tariff thing's over, there's going to be something else to be scared of. I promise you that, because the media is, if they're not good at anything else, they're really good at coming up with things that people should be scared of, and then leaning in on it and making sure that everyone is scared. So if you want to invest in real estate, find a good deal, buy it, and hold on to it. This chart that I'm looking at has a lot of green on it. A lot of green. It's 75 years. There's only seven years that were down. 5 of them were 2007 to 2012. Interesting. So if you want to wait around on tariffs, I don't think the over under on that is in your favor, because I don't think the tariffs are going to have that massive of an impact. But if they do, well, then you waited and you're going to pay higher price. Honestly, I think if you wait, you're going to pay a higher price anyway, or at least you're going to pay a flat price, and you might miss some of the remarkable incentives that are being given right now. So for what it's worth, my take on real estate and tariffs is no big deal. Nothing to see here. Definitely don't let it scare you into not buying. I think that's a false assumption. Just like I thought that the election was the same thing. I'll come on here when the next thing shows up. That scares everybody out of buying real estate. And on that happy note, folks, get out there and make something happen.
This has been the Get Real Podcast. To subscribe and for more information, including a list of all episodes, go to getrealestatesuccess.com.